Welcome to the Everyday Investor. I'm Nicole Edmonds. I'm filling in today for Rav Tour, and today we have a very interesting show. We're going to be talking about investing in land development. We're going to go through the 4 questions that we ask for any investment before we get involved. We'll be talking through what is my return on investment. Number 2, when do I get that return along with the money I put in? 3, what is the minimum cash amount needed? And 4, what is the risk in the worst case scenario? Grab your pen and paper, don't go anywhere. The Everyday Investor begins in a moment. The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Centre Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
For over 10 years, Strong-Base Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
At Here to Clean, we understand that inviting someone into your home is a big deal. All of our cleaners are carefully vetted to ensure we send the right person to care for your home. We offer a variety of cleaning services to meet our various clients' needs, from small office and vacation rental cleaning, post-renovation and move-in cleaning. We will arrange a team of professionals with the right skill sets to tackle your toughest jobs and get them done right. Email, call, or text us to discuss your unique needs.
Hey there, this is Anthony Maniaci. Here at Maniaci Sobel Altbaum, we're a law firm working for you in all facets of the law. My specialty is working in corporate commercial law and real estate, but we have lawyers that work in all other areas, including litigation and family. Our practice focuses on service with a personal touch, delivering in-depth legal advice and guidance to our clients, treating you as people, not as a number. You can reach us at maniacilaw.com.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
The Real Estate Center is one of North America's leading real estate firms, helping everyday people buy, sell, and invest in real estate. By leading with education, we make sure our clients have the know-how and confidence to make informed decisions, allowing them to reach their goals. Through our vast network of experienced advisors, the Real Estate Center is able to provide a full-service experience across the entire country. Whether you're looking for your first home, an income property, or commercial investment, we're here to help. Visit our website at therealestatecenter.com.
Welcome back to the Everyday Investor. Today we're talking about investing in land development. We have Peter Politis with us today. He's the CEO of Greybrook Realty Partners. Peter, thank you very much for joining us.
Thank you for having me.
Now, Peter, you are CEO of Greybrook, which is involved in land development. How did you get involved in land development?
Greybrook is a private equity firm. There are 3 principals at Greybrook. I'm one of the 3 principals, and I run a real estate division. It all started about 15 years ago for us, where myself and my 2 partners saw an opportunity to start really investing in the growth of Toronto. And over the last 15 years, we've managed to create very large development relationships with some of the biggest developers in the GTA and South Florida that allow us to partner with them on an equity basis to kind of own land and share in the development profits together.
Okay, so tell me how that works. Greybrook is not a developer, is that correct?
Yeah, no, Greybrook's an asset manager that has an investment thesis in development-based real estate. So what that really means is that we joint venture or partner with these developers. Now, Greybrook along the way helps make all major decisions with our developers 50-50. So we're involved throughout the course of the development, but we're really an investment manager and a private equity firm rather than a developer.
Okay, so you're partnering up, Greybrook is partnering up with a developer who's found some land and developed a project that they want to present to you, and then you have the relationship with the investors, is that correct?
Yeah, I mean, we have the relationship both with the developers and the investors, really. And what really happens is we, together with our developers, go out and try to find opportunities, whether it's building homes or townhouses or condominiums or rental buildings throughout the GTA and in South Florida. We kind of look for opportunities together, and then once we find an opportunity that we think fits their risk profile, our risk profile, our investment thesis, then we come in and we buy that land together with both our development partners and our investors.
Okay, so you are bringing the deals to investors like myself, like Rav, or is it companies that you're coming to, or is it individuals?
Yeah, I mean, we have a broad spectrum of investors. I mean, we have over 5,000 different types of investors across 32 countries. They range from individuals, high net worth individuals, professional athletes, doctors, lawyers, school teachers, you name it, to family offices, institutions, some charitable foundations. And at the end of the day, the good thing for us is that all investors, big or small, really get the same investment return regardless of their total investment.
Okay, very interesting. So if somebody does want to get involved with a project, is it a large sum of money that they need to put forward? Or if you are going to an individual, is it a lower sum of money?
Yeah, I mean, for our minimum investments to invest are $25,000 for an individual or really institution or different stuff. And some people think of that as a relatively low barrier to entry. And we do that on purpose. And that's really because we don't try to invest in any one project. Our goal is really to create portfolios for our investors. Just like you don't buy one stock, you want to buy a basket of them. So even though our investors get to choose the developer, the location, and the project they're involved in, with low minimum investments, we can take $50,000, $100,000, $1 million and invest it into multiple projects and create a portfolio of diversified real estate for our investors.
That's smart. To lower the risk, if I have $100,000, I might put 25, 25, 25, and 25 in 4 different deals.
Exactly.
That makes sense. Do you go with the developer, find the land, and then decide on the project to build, or do they come to you with a project that they already have in mind?
Yeah, so we have a select number of builders and developers that we work with. So we're not available to any developer who comes in and finds a piece of property and says, oh, I need some help money buying this. That's not who we work with. We work with the biggest developers who have large balance sheets and execution. And most of the time, we are searching for properties together. So as soon as they identify something that might be of interest, even before we put an offer in, we will look at it together, look at the planning aspects, the development aspects, the numbers, and see if it fits our wants. And then we can move forward and buy a property together, and then we bring the investors in only after we've done all of our diligence and got everything planned out. Everything is kind of fully understood by the time the investors come in.
Okay, that makes sense. Let's cut to the good stuff. What are the returns that people are getting? If I'm an investor, I'm putting in $25,000 or $100,000, what kind of returns am I seeing on my money?
Our goal is to basically double our investors' money every 4 to 5 years. So we're looking at a 20% on an annualized basis from a return standpoint. I will tell you, while the returns are good, we don't sacrifice risk or using more leverage or high interest loans to get a higher return on our equity. So these are the kinds of returns that are available in these large scale developments. I mean, a small project for us would be a $100 million development. So we have Greybrook ourselves have over 50 development projects, about 14 or $15 billion in completion value. So as an investor, the real key to getting good returns is projects that have large economies of scale with developers and managers that have a lot of experience. And that's really kind of how we focus. So we obviously think the return is great, but we don't do it at the risk of increasing potential downside.
Yeah, because a lot of people do think that, right? When they hear high return, they think, oh, that must be high risk.
Yeah, and I think that what I tell people is there's different kinds of real estate. Most people who invest in real estate really do it as a consumer. They buy a home, a townhouse, a condo, a plaza for cash flow appreciation or some combination of the two. We look at it differently. We're really in the manufacturing business, and we're the producers rather than the consumers. So when somebody walks into a sales center and they buy a home, a townhouse, or a condo, from there, we've made our money on that day as the developer. We made our manufacturing margin. We don't care about rental rates, interest rates, closing costs, what happens in the future. We just buy land, sell it, build it, deliver it, and then we move on and cash out.
You talked about the different builders. These are some of the biggest builders. You mentioned that they have big checkbooks. Do they need us as investors, or are they just coming for some benefit to them? What's the reason that they're coming?
I think the reality of the situation is that the biggest institutions and companies, organizations in the world have partnerships for various reasons. We can not only help add value by bringing capital to the table, not because they don't have capital, but real estate development is a very capital-intensive business. In last year alone, we bought over $750 million of development land. I don't care, just in the GTA in South Florida in that calendar year. So
wow.
Developers have taken partners, whether it's capital partners or other developers, since the beginning of time. The added benefit that we have is that we have so much perspective doing 50 or 60 development projects with 15 or 20 of the biggest developers around, that we can add a lot of value to the development process as well.
What kinds of projects are these? You mentioned briefly like townhouse, condominium.
Yeah.
What are they typically?
Yeah, so we kind of have a little bit of a different focus depending on the kind of product type. So on the condominium side, we've really focused in the core of Toronto. And we have many holdings in Yorkville. We have holdings on the Toronto waterfront along Queens Quay. We've done stuff in Liberty Village, done stuff at Avenue Road and Lawrence, in the Junction in Bloor West. So our condo projects are really focused kind of more than, say, the 416 or the core of Toronto.
Okay.
But obviously there isn't 50 or 100 acres of land in the core of Toronto to build townhouses or single-family homes. So our home portfolio really goes across the 905 and the greater Golden Horseshoe area. So we have stuff in Markham, Woodbridge, Brampton, Hamilton, Durham. We have tons of stuff going on in Durham. Durham's exploding lately. We have stuff in Cambridge and Fergus and different locations because they're different buyers. And that's how we diversify our real estate investors. The person who's buying a $5 million penthouse or a $10 million penthouse in Yorkville isn't the same person who's buying a $600,000 home in Oshawa or a condo in Liberty Village or different things. So that's about the diversification that we want to add to people's portfolios and to our portfolio.
Very interesting. We're going to take a quick break here. When we come back, we're going to talk about how people can get involved, what some of the risks are, and we'll talk about timelines and possibly go over some past projects that you guys have done.
Great.
Okay, don't go anywhere. The Everyday Investor continues in a moment. The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Centre Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
ProFunds Mortgages and its affiliate Valor Capital offers expert service and funding solutions for builders and developers, offering first and second mortgages with a combination of institutional and private lending. ProFunds Mortgages and Valor Capital offer a full-service construction and development package with in-house engineers, developers, builders, planners, and the best of financial analysts. With the many years of experience and credibility, ProFunds and Valor would love to be your added value financial partner. Visit us at profunds.ca.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
For over 10 years, Strong Base Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
Like people, businesses have their journey, their path, sometimes straight, but more often evolving, growing, and adapting. And like people, businesses' needs change, creating the need for knowledge in areas like accounting, consulting, and tax. Areas critical to your continued growth and success, all part of the journey, and all part of what we do together with you. So that when your business has arrived, it's ready to keep going. MNP, wherever business takes you.
Hey, it's Vitali, Rav's door and window guy. Here are 4 quick tips when choosing doors and windows for your home. 1. Get 2 to 3 estimates from a reputable vendor. 2. Choose the right manufacturer. 3. Make sure you have a warranty. And 4. Get professional installation. To book a free estimate, contact us at torontodoorsandwindows.ca.
Welcome back to The Everyday Investor. I'm Nicole Edmonds, filling in today for Rav Tour, and we're talking about investing in land development. I have Peter Politis with me, the CEO of Greybrook Realty Partners, and we've been talking about kind of what Greybrook does and the ins and outs of how an investor can be involved in big land development projects. I did want to ask you, Peter, just to clarify, when an investor is putting their money with Greybrook in a land development deal, are they just part of a big fund and then they've got equity in multiple deals, or are they choosing a specific deal to get involved?
That's a great question. I mean, our business philosophy is that we want people to understand and pick and choose the projects they want to be involved in. I mean, obviously, if we're doing a project, we feel very strongly that it should be part of someone's portfolio, so it's kind of got the greater blessing. But from our standpoint, everything's on a project-by-project basis. So investors get to choose the developer, the location, the type of project, and the time horizon of the project that they're involved in.
Okay, time horizon. So I would imagine that would be a big determining factor for an investor if they are going to be in a longer deal or a shorter deal. What are these timelines that you're talking about?
I think it could be. I think it's something to consider, mostly because as a private equity investment, you don't have access to your capital throughout the term of the project.
Okay.
But a townhouse project, depending on the size and kind of the status of the lands, can be anywhere between 2.5 and 3.5 or 4 years, depending on the size. We've done condominium projects that can be anywhere from 4 to 7 years, again, depending on the size of the building, number of phases, and those things. And we've done what we'll call master plan communities, which the total term of the project might be 10, 15, or 20 years, but after 4 or 5 years and the first phase closes, people start seeing their cash coming out of the projects as these houses close, and they'll get constant distributions over the next 5 to 10 years thereafter.
Okay, so that's interesting. When we're talking about rental properties, we're often talking about cash flow, right? We're talking about a monthly cash flow or an annual cash flow. For these deals, you're talking about distribution. Is that annual cash flow, or is that at the end of the project, or what does that look like?
Yeah, I mean, there's not really anywhere for cash flow distributions to come in a development project. I mean, people who invest in development do it in order to increase their capital at the end of the day, rather than getting a cash flow on a monthly or quarterly basis. So once people move into these projects, whether they're homes, townhouses, condos, or if we're building rental buildings and then selling them, once we do that, that's when people will get their distribution check. So not on a monthly basis and not more at the end of the project. Now, we don't have to do it in one lump sum check. So if we have 100 homes or 100 condos and we've sold 95 of the 100, we can distribute all the capital and the profits from those 95, and as we sell the last 5, we can make additional distributions thereafter.
That makes sense. And it makes sense that it's not a cash flow, right? If you're putting your money in to actually develop something, if it's not developed and sold yet, where is that money coming from?
Yeah, I mean, the interesting thing for me is I kind of backed into this being a cash flow strategy in a roundabout way for me, because for so many years I've invested in so many projects. So now that I have so many projects in my portfolio, every quarter I have some kind of project finishing or paying out or some kind of phase. So it wasn't planned to be a cash flowing strategy, and it's not, but it kind of backed into one for me after doing so many for so many years.
That makes sense. And so we talked earlier about if you had $100,000 to invest and separating it out, you could theoretically strategize that so that your funds are coming to maturity.
That's exactly what we do. We can put you in a 3-year project, a 4-year project, and a 5-year project. Most people think they prefer shorter term projects, and if you need access to your money earlier, then I think that's something that you should consider. But typically the longer term projects will have higher margins and make more money because our land cost is the same over a much longer period of time. If you buy land today and sell a house 3, 4, 5, 7 years from now, your margins are typically higher.
Very interesting. I want to clarify something else as well, in case our viewers at home are watching and thinking that they're lending on these projects. That's not what they're doing, correct?
That's correct. We are owners of property with these development partners. So if someone says, you know, what's my security? You're the owner of this individual project. And it's done in a secure way from not having any liability for the investors being an owner of the project.
Yeah.
But at the end of the day, they're really owners of these projects, and we allow them to use different kinds of funds. So for example, obviously they can invest with cash and they're personally with their corporations, but we allow for RSP eligibility, TFSA, RESP, LIRA, et cetera, and allow people to access different types of capital that they have to invest for different projects depending on duration, time, return, et cetera, et cetera.
That's very interesting because I know a lot of people have their money in their RSP and they are not happy with the options that they've got available to them. They're making really low returns. So you're saying that they can take that money, put it in these deals, and be making 20, 25% per year.
Yeah, and that's really, at the end of the day, the interesting thing, because the RSPs get to compound very strongly because obviously you pay no tax until you pull it out.
Yeah.
So doubling your money every 4 to 5 years in your RSP over a period of time doesn't actually take that long before it becomes a mean, even if you're starting with what you think is not a amount of capital you can retire off of, you can grow it so it can become something you can retire off.
Yeah, because it's doubling every 4 to 5 years, right? If we're doing 20 to 25% per year, you're doubling it. I like as well, if somebody's got their money in their RSP, they typically aren't needing that right away. Okay, you mentioned earlier about Toronto and South Florida. Those are the locations that you're mostly focusing on, is that right?
Yeah, I would say the greater Toronto area, the greater Golden Horseshoe. So
Okay.
we do expand to Hamilton and Cambridge and Kitchener and Guelph and all those places. But yeah, South Florida and the GTA.
Okay, and what do you like about those locations? Why is that where you've chosen to focus?
Yeah, I mean, most people don't really realize that Toronto is an island, like kind of Manhattan, in the sense that it has a lake on one side and a legislative greenbelt on the other. So as immigration keeps coming in and people keep coming in, the demand for housing remains very strong. So over the last 20 years, what we did was spend a lot of time growing outwards, and that's where municipalities grew, like Richmond Hill and Markham and Brampton and Mississauga. But we've reached those geographical borders over the last 10 or 15 years, forcing us to now go up and build condos. So there's such a land scarcity in the GTA and there's such high immigration coming in that our vacancy rates in the downtown core for condos are something like 0.3 or 0.4%. And about 1.3 or 1.4% across the entire GTA. So we have a real need for housing, and I think that the Toronto, on a global basis, still remains cheap. I kind of have the joke that Torontonians are the only people that think Toronto real estate's expensive, because anywhere else in the world, we're relatively cheap.
And then what about South Florida?
Yeah, I mean, South Florida is actually really interesting. It has a lot of unique attributes as a state itself, which is one, they pre-sell condos like we do here in Toronto, which is one of the few places in the world that happens. So that's a very safe way to do development by getting your pre-sales before you start construction and taking these big construction loans. And secondly, on the rental side, we build a lot of rental buildings in South Florida. The millennial younger generation is going down there. They're attracting a lot of skilled labor. And there's a lot of companies who, because there's no state income tax and because cost of living is less than other places, that there's a lot of growth in the 18 to 35 market. What people don't realize is that now in South Florida, 18 to 35 is the largest percentage of the population down there.
Pre-selling condos, that sounds to me like if we're pre-selling, then we know what our return is going to be.
Yeah,
is that right?
I think on a broad basis, the answer is yes.
Okay.
I think when you ask me what the two biggest risks in what we do, I typically say they're time and what I'll call illiquidity, which means we're not a stock and you can't just double click your mouse and then all of a sudden your money goes back into your account in a day or so.
Right.
We have to wait until the projects are complete. But the way we buy our land, we don't take what we call entitlement risk. So there are organizations who buy land way outside the urban boundary that don't know if and when they're going to be approved for what you want to build for. We don't do that. We buy lands that are designated for, if we're building residential, for residential, if we're building commercial, it's for commercial. So we don't change uses. And the market here, pre-selling it, really means that they don't let you, and we don't need to put a shovel in the ground to build these buildings or homes or townhouses until we've secured the revenue that allows us to be profitable. And that's the unique attributes that we have here and in South Florida in the condo market that allows you really to do development differently. I mean, in places like New York, they'll build buildings without a pre-sale and in 3-4 years start selling units, but they don't know if or when or how they could.
If you're selling it now and then developing it, it really doesn't matter what the market is doing at that point, I suppose, because you've already sold and locked in for a certain price. Is that right?
That's right, and people are committed to closing and buying those units. The interesting thing is that allows for really two things. It allows for security for the developers, and it allows for the purchasers who come in and buy units and not have to carry these units and have further appreciation over 2, 3, 4 years, depending on how long it takes to build. And it has them to share in the profit that exists in development as well.
How many projects do you guys see per year? I would imagine you don't approve all of them. I hope you don't approve all of them.
Definitely not. Like, we'll typically see somewhere between 150 and 200 projects in a given year. I mean, legitimate projects, not someone sends me something that I look at it for a second and it doesn't make sense. I mean, we have a team of over 60 professionals at Graybrook on the real estate side, and we're constantly looking at projects. And out of those 150 or 200, we'll buy somewhere between 10 and 15 projects in a given year. One of the most unique thing about us is that we have so many large, amazing development partners that have so many opportunities they see, that as they see opportunities, we get to come in and see them and then pick and choose the best of the best from the best of the best in the development card. So from an investor standpoint, it's such a unique value proposition to them to have access to the biggest projects in the biggest areas with the biggest development partners.
Yeah, and you're getting the cream of the crop because you're getting to look at them and then just pick and choose what you're putting out to those investors.
That's exactly right.
Very interesting. We have a couple, just a minute left here, but I want to ask you, do you have any examples that you want to share of projects that the viewers watching at home might actually know of?
Yeah, I mean, for us, we've built a lot in Liberty Village. So we've done 4 developments out there. We have 2 more under construction. That was an interesting project for us. It was a 6-year project. Every $100 that went into that project came out as about $350. So you're 100 back plus $250 in profit over 6 years. Yeah. We recently bought a piece of land on the Queens Quay between Jarvis and Sherbourne in downtown Toronto. We bought it for $60 million. Our intent was to develop it into 3 towers. An opportunity came after a couple years of ownership and finalizing the zoning to sell it for $170 million. We thought long and hard, and while it was a great property, we decided that taking that $100 million profit made the most sense for us, so we did. And then we have townhouse developments in Markham and Mississauga and stuff like that. So for us, locations vary, but the thesis is still the same.
Very interesting. A couple of my friends were in the deal that you just talked about that paid out early with the return on that. What was the return on that one?
Yeah, our investors essentially nearly doubled their money in just over 24 months.
Wow,
So it
that's
was
awesome.
Win-win for everybody.
Very impressive. Well, thank you so much, Peter, for joining us today. Very interesting talking and learning all about investing in land development with Graybrook. And I want to thank you, the viewers at home, for watching. If you want to learn more about this show, you can visit our website at www.theeverydayinvestor.info. We'll see you next week, same place, same time. Thanks very much for watching.